This week, Ben and I are going to preview some USDA balance sheet updates, along with looking at updated National Oilseed Processors Association numbers and some other events going on around the world. Hello and welcome to the weekly commodity market update. I'm Will Robinson, joined as always by the University of Missouri's Ben Brown. Ben, how's it going?
I'm doing better than I think you are, Will. How's the wisdom teeth post? How's the post wisdom teeth, I guess I should say.
Yeah, so definitely a lot less crowded in my mouth. Got all four of my wisdom teeth out this past Friday. So that was first thing Friday morning, and this is first thing Tuesday morning. So had a little bit of time to recover, took the weekend, and was back to work yesterday. So
And
so far
some
so
and
good.
yeah, and somehow magically you still have all your wisdom, right?
No,
It's
I
it's
think I lost
magical.
it. I think I lost it.
Oh,
Yeah,
okay. All
yeah.
right. All right. Very good.
But speaking of wisdom and knowledge, here we have some updated numbers. So I'm going to give a rundown of the prices. These aren't full up to date as of right now, but this is as of the close on Friday. So we're going to give some adjustments here. But March corn up 9 cents at 5.05. December corn up 3 cents at 4.70. Soybeans for March up 21 cents at 10.57. November beans up 7 cents at 10.59. Soybean oil on a cents per pound basis for March up 0.74 cents per pound at 46.81. Soybean meal by the short ton for March down $1.10 at 294.80. March wheat down 10 cents at 5.90. July wheat down 8 cents at 6.17. That March cotton contract down 1.03 cents a pound at 66.08. And then that West Texas Intermediate crude oil contract down 49 cents a barrel at $70.22. But Ben, that's as of the close on Friday. We had quite a rundown on prices on Friday, and then again carrying into this week. So, what's your takeaway as we see corn, for instance, is now below $5 on the nearby contract? Just your takeaway for the market.
Yeah, so you're absolutely right. Let's just take corn, for instance. We show a weekly change, or last week we had a weekly change of 9 cents, positive 9 cents. We're filming here on Tuesday morning, and we're down 20 cents from where we would have been last, if we did a Monday to Monday trade. So, again, it's these markets are moving quickly, just because I think we built up some expectations in the bullish side. There was, maybe a nice extended rally, which there was, right? Like over a month and a half of kind of an extended rally. And this is the correction that's coming with it. We got into that air above $5 old crop corn. It caused a little bit of farmer selling. The funds are also extremely long corn. I think we're going to talk about that here to come. But just a lot of things that had led to a bullish rally that are now starting to kind of pull back a little bit. And as a result, we've seen the grain markets pull back. It's been the corn market and feed grains in total that's kind of pulled the complex lower.
Well, Ben, a few weeks ago, we talked about corn, maybe setting a new floor and establishing around that $5 mark. And then as soon as we get there, it feels like it just pops below. But one of the things that, kind of aided that downward movement is the upcoming USDA spread or balance sheets, looking at maybe targeting some increases in corn acreage there. What can you tell me about your expectations for USDA's balance sheets coming up later this week that really already kind of shifted the market?
Sure. So at the USDA Ag Outlook Forum every year, they put out their first balance sheets for the new crop marketing year. So this would be the 25-26 marketing year, or the crops that we'll plant this summer for spring planted crops. The numbers themselves are interesting because I'll just start with the demand side first, and then we'll go to the supply side. So the demand numbers are probably the most interesting in these reports because it's USDA's first indication based on their economic models about what we're going to consume, whether that be for feed, ethanol, or exports in the new marketing year. So, a lot of people look at those demand estimates because they don't necessarily have a huge understanding, or at least it's more uncertain for the everyday person out on this, out in the field to kind of put an estimate around future demand numbers. So that's demand. That's probably where most of the interest this week is going to lie. However, the headline numbers are always going to be on yield, acreage, and production. And USDA uses a trend line yield. That's notable because that'll be the yield that they use in their first WASI report come May. It's based on economic forecasts of the last so many years, it is worth noting that we have not hit the trend line yield when we got to the end of the production season for like the last 4 years in corn and soybeans. And so, there is some expectation that our trend lines are starting to flatten out. We're not seeing some as much growth. And that's true, right? We can look at that in economic analysis to see that. However, that's the number that USDA will use. The other number that'll also be a headline number that people are going to talk about, which frankly doesn't mean a whole lot at this point, but it'll grab attentions, is the acreage number. Again, this is based on economic expectations for the year ahead. And USDA will put it out. My personal expectation is that USDA is going to show an increase in corn acres year over year. So I'm giving you my bias. They're going to show a 2.5 million increase in corn acres in 25 compared to 2024. However, I believe that number is going to be less than what the market currently anticipates for the new crop. And so if they start to buy into that, it could be a little bullish to the new crop corn market. However, I do also think the market's going to reject the number and just say, okay, well, that's not the number that matters. The number that matters is the prospective planning report from producer surveys that comes out at the end of March.
Yeah.
That's the number I think is going to, really matter, I think, at the end of the day in the trade. But certainly, seeing where we start out for these early season acreage estimates are important.
Well, and it's one of those things where, again, these are all just projections based on models. So once farms start getting out there in the spring, start getting things planted, you start to see the moisture conditions and seeing how that all unravels. It'll obviously change quickly depending on the conditions. But Ben, talking about some other numbers and some other things coming in maybe below expectations, the NOPA seed report, the National Oilseed Processors Association, another record number for January, but below what the expectation might have been there. So kind of positive, kind of maybe not as positive as anticipated. What's your takeaway as we continue to see record crush numbers?
Yeah, so you're right. So new record for the month of January. In some ways, this was a disappointing report, and I should put disappointing in quotations because it was a disappointing report. It still came in above 200 million bushels for the reported value. That was the second largest all-time monthly value on record, but it fell at the bottom end of the expected range. And so it's one of those things that's still really strong crush, but relative to expectations, maybe a little bit disappointing. I think two things that I'll point out really quickly. One, we've been hearing news that soybean crush facilities have been slowing and idling production due to the lack of guidance around tax incentives. We lost the $1 biodiesel blenders tax credit. It expired January 1. We don't have anything in place. It was 45Z and others were kind of intended to replace that in the marketplace. Those aren't in place yet either. So we've heard of plants idling and slowing production. The soybean crush number would certainly suggest that theory. But then on the flip side of that, the soybean oil stocks number, was one of the largest, volumes in terms of soybean use on record, nearly matching the all-time record back in October of last year. So, that paints kind of the opposite picture that we continue to use soybean oil. We're exporting a lot of soybean oil as well. But, again, it's I think we've got some uncertainty. That's always kind of the name of the game. But the lack of clear guidance around tax incentives and policy is, I think, starting to really kind of maybe play a little bit into our crush numbers here.
All right, Ben. Well, I want to get to two more items this week. First, on consumer sentiment, we saw that consumer sentiment had a significant decline this month, looking at even lower than expectations there. So that might lead you to believe that maybe people will be a little bit more cautious with their spending, maybe a little bit more, saving minded. So how does that shift the tone of maybe looking at the general economics of the market whenever, the sentiment might be reverting, I guess, into a more, hunker down mindset?
Yeah, so I'll put up my expectations and my bias here. So we had a really strong year of consumer demand and spending in 2024. Basically, consumers were confident. They went out, they spent money. And 2024 was a year where the U.S. economy grew, but it was basically growing on the backs of consumer expenditures. I still think consumer spending is elevated in 2025, elevated relative to, let's just say, the previous 10 years. However, I think 2025 is a pullback from 2024. And certainly this consumer sentiment report would suggest that, right? Consumers are becoming a little bit more concerned about the economy. They're becoming a little bit more concerned about inflation. When you dive into the numbers, their year over year expectations in inflation surged to 4.3%. Keep in mind that the Federal Reserve's benchmark is 2%. And right now, some of those inflation metrics, are sitting right around 3%. So inflation expectations by consumers jumped sharply. We've also seen some concern in the labor market, especially as it relates to government employment. So I think consumers just broadly are becoming a little bit more cautious. I think that trickles into ethanol consumption, traveling. I think it feeds into beef and pork and other type of protein demand as well. So just things to be aware of as we go ahead.
Well, and it'd be interesting to look at the breakdown on consumer participation in the market based on what type of financial incentives they're using. Is it cash flow, or are things being put on credit cards? What's the debt to asset ratio, I guess, of people whenever they're participating in these things, and how does that impact their spending on things like you said, like those maybe higher end meat cuts that then add support into the grains markets in certain sectors? And kind of leading into that, Ben, looking at the cattle side. The cattle herd is a little bit smaller this time around this February as compared to last year, but still overall seems to be fairly supportive on the feed side. Can you give me your snapshot on the cattle on feed report as of February?
Yeah, so we don't talk a lot about cattle on feed because we have a sister program that does that, and I don't want to step on their toes. But I do want to talk about what I think this means for feed use. So we've seen really strong feed use for grains, wheat, grain, sorghum, corn, especially for cattle feed. And I think that's going to continue. And I think the February cattle on feed number and report kind of continues to show that might be the case here for a little while. We saw a increase in placements of cattle on feed. It was below market expectations, but still still 1.7% above the same period last year. So placements grew, but not as much as expectations. However, when you dive into those numbers, it's especially those lighter weight cattle, higher percentages of lighter weight cattle, which suggest higher demand for feed grains in the months to come. And so I think these lighter cattle in heavy feed regions are going to continue to demand corn, sorghum, and wheat, other feed ingredients as well. I think that's going to keep our demand relatively robust here for a period of time, especially as it relates to feed grains and feeding especially cattle.
All right, Ben. Well, looking forward to the rest of this week. What should farmers and ranchers be paying attention to that could move the market?
Yeah, so we've talked about some of these things already. I'll just kind of do a quick recap, reminding everybody that USDA's Ag Outlook Forum starts on Thursday. I believe it will be Friday morning when they publicly release their balance sheets for the 25-26 marketing year. So kind of be mindful of that maybe at the open on Friday morning of the market. Second thing is on Friday, we're going to get personal income and expenditures for the month of January. Now, I think this is maybe still 1 month too early, but as you kind of can tell from our economic discussion just a little bit earlier, I'm very interested to see where consumer spending goes. I think January is maybe 1 month too early. It's going to be the February personal income and spending report that'll come out the end of March that I think will be really telling. But that comes out this Friday as well. And then next Monday is the first trading day or business day of the month of March. And so we get all of our beginning of the month reports that allude to demand for feed and oil seeds here in the United States.
All right, Ben, it's always a pleasure having your knowledge and information here on the program. Viewers and listeners, if you'd like to learn more about us and what we do or our sister program, the weekly livestock market update, you can do so at brownfieldagnews.com. Ben, thanks again. I'm Will Robinson on Brownfield.